Hi everyone, Brian from Bearable Traders here. It is Wednesday, March the 9th, midweek, more than halfway through the week here, and this is the midweek video. We'll take a look at where we've been so far this week, and of course we had a big market rally today, and some of the biggest rallies can happen in the middle of bear markets, and we certainly have seen that today. So whether this is going to be a continuation move or whether we are going to chop and maybe even go back down, retest some lows here. Hard to say, but again, not getting overly optimistic that we're going to be pushing to new highs here anytime in the near future. But let's take a quick look at the markets and see where we might be going for the rest of the week. So what have we got coming up here for the rest of the week? This is the midweek review. We've got some economic events that are going to happen tomorrow. Everyone's going to be looking at this CPI number that's going to be coming out Thursday in the morning. So that'll kind of be the focus for a lot of traders and investors. When that number comes out, they're looking for something like a half percentage point increase month over month and 7.5% year over year. So that'll be a number that'll people be watching. Earnings on deck. Well, we had CrowdStrike that was after the market here today on Wednesday, and it's up pretty big on some really good earnings numbers. Tomorrow morning before the open, we've got JD, Chinese company Fuel Cell, which has been in focus. Of course, anything alternative energy has been hot lately. And so we got that before the market open. We've got Blink, and again, charging company could be interesting. Rivian, again, probably no earnings to report to speak of, but we'll see what they have to say regardless. Docu is another one that's reporting, and Oracle, all after the market closed Thursday. And on Friday, we've got a few pro reporting. I just like to say this one, FU to you. Or FUTU, whatever, is reporting Friday. And observations for the week, of course, just after the market closed here today, Wednesday, we had Amazon announcing a stock split. I believe it's 20 for 1. And of course, Amazon was up a pretty big after that announcement. It actually went over 30,000 and then pulled back and still up significantly, about $130 a share right now on that news. And of course, observations for the week so far, volatility remains elevated. You know, we've got the Russian situation continuing, which is not helping with our inflation statistics and supply chain problems. And of course, people are still thinking about how the Fed is going to respond to all this in their upcoming meeting. So that's what we've got going on. And before we get into looking at the charts, this is a quick ad for my book on Amazon, How to Swing Trade, if you have not checked it out yet. Rules, routines, strategies that I use as a swing trader. So let's get into some of the charts and take a look at what we got going on this week so far. And we'll start out with the weekly indexes. And you can see here, again, we had this resumption in a upward trend of the Treasury bills. This is the 2-year, and of course the 10-year. We're back up. I believe it's around 1.9, a little bit higher than that today. So we're still under 2, but right back up to that 2 level that after this significant pullback that we had during the week, or during last week, I should say. Transports, again, here we've had a couple of down days and now a big up day on the market's pretty much going to be the same. You can see pretty big volume here today. So we're kind of established in a bit of a range here on the transports. You can see here 15,750 and somewhere around 14,750 is the range that we are in right now. RSI is starting to turn back up again. I suspect we're kind of stuck in this range, and I think we're going to be trading in range-bound markets for a while here. Got a lot of cross currents going on with, of course, with the global situation with Ukraine and Russia and all the pressures that it's putting on the markets. On the other hand, you've got the U.S. economy, and there's still lots of money sloshing around out there, and it seems like consumers are still spending, so it just doesn't seem to be I don't see a lot of reason to sell off, but I also don't see a lot of reason to go buying back up to new highs either. So anyway, this is the Dow today. You can see we had a big gap up at the open, and then screamed higher. We did pull back a little bit at the end of the day there, but again, not bad volume. Certainly not as big as the down day yesterday, which would lead me to believe this isn't as robust a rally as we might hope for. The Dow on a weekly, again, we're trying to hold on to this 33,000 level. The daily on the Qs, you can see here, down significantly on the day. Then we had the big gap up this morning, and then obviously the rally throughout the day. Bit of a pullback at the open, but again we rallied, and again off the high of the day, but not a bad performance. But again, as I say, the biggest bull runs can happen in a bear market, and we definitely are in. If you look at this, you draw a line here, we are definitely in a downtrend. Trend line well above this place where we closed today, and also we are well below this 20 moving average. So again, we're still in a bear market, and again you can see a trend line there as well, still below that. Again, the SPY, sort of same story. I don't want to keep repeating myself here, but again, still in a downtrend despite the nice move we did have up today. Still lots of concerns in the market, and you can see here as well the IWM, again sort of range bound, 205, 195. And the VIX, we were, of course, with the markets rallying today, the VIX did come off a bit, but really didn't come off that much when you consider the amount of move that we had today. And you can see the VIX is still in this this uptrend, so it really didn't break trend, but we did have a down day, and not surprising because of the up market. The dollar really sold off today. The movements in the dollar have just been wacky, incredible. And you can see here we had the big gap up with the war situation, flight to quality on currency, and then we had a big pullback here today with the euro popping up a little bit, I believe was the cause of that. Bitcoin, there was some positive news that came out of the White House. I think some discussions about how they're going to look at regulating it going forward, and that had it came out with a fairly positive tone, and I think a lot of people were worrying that it might come out with a lot of negativity, and that actually turned out not to be true. So we had a big pop up here today. We still are, they're asking for comments from other agencies, and we're still a year away from getting any kind of any kind of regulation policy decisions. So again, this was certainly got a nice rally on this today, but there's a lot of ground to cover between now and when we get see some actual regulations. But again, we seem to be just on a weekly basis. We're kind of range bound right now, and 35,000, 36,000 support, and about 45,000 sort of these moving averages here, resistance. So bit of good news for Bitcoin, I guess, if you're a Bitcoin holder. So we'll quickly flip over to the bearable trading terminal. It's bearable terminal or bearable or tradingterminal.com. And you can see here, just wanted to take a look at this performance we had for the day. You can see it was definitely a risk-on day in terms of where money was rotating into. We had technology. We had the financials up quite a bit because of the increase in the interest rates on the treasuries. The financials responded positively there. Consumer direct discretionary, which has really been beaten down, as I've talked about in my previous videos, had a nice pop today. And if you go to the bottom here, things that didn't do well today, energy and utilities, which energy's obviously been on fire. Utilities, bit of a safety trade, took a bit of a dip here. But if we look at this on a weekly basis, you can see where the money has been going on a overall. Energy has been very strong, and utilities. So you almost can flip this chart around if you look at where things have been going on a week versus what just happened today. So a bit of a relief rally, and again, I think the jury's out as to whether that was just a bit of a relief rally, short covering, or whether we have a sustainable turn to the and change in trend. So we'll just finish up by looking at some things that I've been keeping an eye on. Gold, big reversal today. You can see here after breaching 2000, pulled back down, and now we're back below 2000 again. But again, it was a real risk-off day. You can see here, this is almost this is a kind of an engulfing candle here, but again, just a monster run up. So eventually, these things just have to correct. They just can't keep going up the way they have been. So gold obviously taking a hit today. A lot of profit taking going on, and but the trend is still up. So we'll be looking for opportunities to get back into that. Fertilizer, again, nothing has really changed with the shortage of agricultural products, shortage of fertilizer. I don't think, there was some news about oil supplies. They're talking about working with Venezuela, UAE pumping more oil, but they're all just they're going to have a difficult time making up in the short term for some of the oil that's been coming out of Russia. So I think there's going to be a continued challenge in these things. So we did get a bit of a pullback today, but I think that the fundamental reason these things were going up has not changed. So CF, another good one to have picked up on a pullback there at 85. Now it's $7 higher. Again, that's a very nice looking chart. CSX pulled back again, back into this range. Could be a good area to buy back again, around 33.60. Freeport McMoran, again, we've had this pullback, but again, same thing. Copper's still shortage in supply, and we did get a pullback to where we broke out from. This is quite a common pattern. You break out, you check back to where you broke out from, and then you go higher. So I'd be watching for FCX to go higher. Again, gold. The miners actually did perform pretty well. We opened up a significant gap down. This is a pretty indicative candle that things were going to reverse on Tuesday. But we gapped down quite a bit. We did finish really well off the lows of the day, which again gives some credence to the idea that we are still in an established uptrend. Again, MOS, another fertilizer play, really sold off hard but came back. Seed, again, same story. Silver not as good a day. And the dollar, or the oil pulled back on, like I said, that news. So again, I don't think that our oil shortage problems are going to be solved anytime soon. So again, this pullback, possibly an opportunity to get long, and you can use something like an XLE. Let's take a look at that quickly. Again, kind of an indecision candle on the day when it was all said and done. I did take some XLE in the morning when it was down, and I think I had a trailing stop, so I stopped out of the rest of it on that. But yeah, so we had a decent, got a bit of a decent move on that one during the day for a day trade. But I'm trying to so much volatility, so much news-driven action in the markets. It's you've got to be really on top of things to be swing trading right now. So unless you can pick a trend and go with it like this energy trend was. So that's it, everybody. Let us take a quick look at the markets. Let's see how we're looking right now. We've got the Dow down. Got the S&P kind of flat, the NASDAQ down a bit, and the Russell just down a bit. So I think, again, everything, a lot of stuff is going to hinge on what happens when we get these CPI numbers in the morning. It's going to be interesting to see what those numbers come out and look like. So that's it, everybody. We'll see you tomorrow morning. Hopefully, we will start out as always live on YouTube at 8 in the morning and take you through the pre-market, looking at the movers and shakers. And then if you're a member, you can you'll be joining us, obviously, the market open, trading that opening. So have a great rest of the evening, everybody, and hopefully we will see you tomorrow. Bye for now.